Hello everyone, welcome to the Nifty 50 weekly technical. Last week we mentioned that the price could test a demand zone. We speculated that it may take some time, but this week we observed a quick recovery from that demand. Now there are two possible scenarios. It could either from V-shaped recovery or face resistance at this order block. Both scenarios are possible. That if we look at the daily or if we look at the weekly chart, we need to monitor if the price can close above this key level. A close above this area would indicate a potential reversal, which could lead to breakouts from previous swing lows. However, if the price action behaves differently, we might see a different price movement when the price tests historical demand zones. It often shows an immediate reaction as we have observed. At this point, we are uncertain whether we are witnessing a reversal or just a recovery. So you need to wait for confirmation. If the price closes above this resistance level, we can be more confident in our assessment. When we analyze the weekly chart, there are some encouraging signs. Price appears to have broken out of downward channel, which we predicted last week. If the price continues this upward momentum, there are two possible outcomes. It could encounter resistance or it could fit a classic chart pattern as shown in the last week. Upon closer examination, we can see that the price approaching its resistance area. So we could wait for it to close above this resistance level. If that happens, we can expect some upward momentum. Checking the daily chart and indicators closely, we see that the price has already broken out above all moving averages, which is a clear indication of potential reversal. However, we should still wait for that breakout confirmation, as the price might face critical resistance at this area. According to the Bollinger Bands, the price has already broken out of the mid band with an immediate target up at the upper band. The RSI is at 62 and we see a positive MACD histogram with a positive crossover above the zero line, suggesting that this momentum could be sustained for few more days. Furthermore, with the Ichimoku indicator, the price has also broken out of the cloud along with all baseline and conversion lines. If resistance occurs again at this level, we can expect support from in the cloud area or at the baseline. In summary, we anticipate a continuation of this momentum in the upcoming days or a slight sideways movement until we see a breakout. Thank you for watching and stay tuned. Now moving on to the Sensex weekly technical update. The immediate resistance or supply area is where the price has already closed near the price action. We need to wait for a breakout for confirmation of either a reversal or a continuation of this momentum. There may be a slight correction until that area due to existing gap. Using Fibonacci retracement tool, we can expect a potential bounce around the golden ratio. In the weekly chart, we see that the price has also broken out of the downward channel, which is a positive sign. Last week, we predicted two possible scenarios for this channel breakout, one leading to move to a specified area and the other facing a strong resistance at a higher point. The price closed exactly at the resistance area, so you need to confirm whether it can stay above this level before expecting a certain price action pattern on the daily chart. Checking the indicators, we see that price has broken above all moving averages. Previously, the price experienced a pullback, but this time it made a second attempt. To avoid false confirmations, we should wait for a confirmed breakout with a closing candle above the resistance. Otherwise, it could result in a false breakout again. If the price rejects from this area, we can expect support around these gaps. The Bollinger Bands indicate that The price has already broken out of the mid band with the immediate target being the upper band. The RSI is at 62 and the MACD shows a positive histogram crossover, suggesting that this momentum could last for few more days. As per the Ichimoku indicator, the price has broken out above the pivot and the cloud, including all baseline and conversion lines. It faces immediate resistance. We could see support emerge again from the cloud or pivot areas. To wrap up this analysis, we can expect either a continuation in the next move or a slight correction before further advancement. Thank you. Welcome to the S&P 500 weekly technical update. Last week we discussed how the market experienced a significant crash leading to increased volatility in price action. As we analyze the recent candlestick, we see that the price action has become quite erratic and difficult to interpret. We previously mentioned that if the price could establish its own support in the current area, it would create a larger trading range. Recently, we have observed the price contracting and forming a reversal zone. However, if this support zone breaks down, we could see even worse price action, making it challenging to predict or expect new swing lows or expect new swing highs. At the moment, the price is attempting to create support zone, but there have been rapid declines and we have not yet received confirmation of a reversal. It's advisable to keep a close watch on the situation based on that current price patterns. Regarding the moving averages, from last week's data, we noted a significant decrease in price followed by a quick recovery attempt, which is now encountering resistance at the moving averages. The situation remains similar. As per the Bollinger Bands, the relative RSI below 40 indicating downward momentum. According to the Ichimoku indicators, we are still facing significant bearish signals suggesting that price could drop further. In summary, we recommend maintaining a watchful stance while waiting for the price to settle in this area. Thank you for watching and stay tuned for further updates.